Hello traders, what's going on? So yes, this is another video one day after I made a previous video yesterday, mainly because this is something important to share right now. Okay, so what you are looking at is Snapchat share plunge 25% on disappointing second quarter result, and they also plan to slow hiring. So this crash on Snapchat, right? It is not just isolated to Snapchat. You will see that the repercussion is spread across similar company with like similar business structure, from advertisement revenue like Alphabet, Google. Of course, the most common is the Facebook Meta. Okay, so because Snapchat share plunged 25%, right? All these other companies that rely a lot on advertisement revenue, also the price dive quite significantly. So let's kind of go through the chart first to see how the aftermarket hours was like, and we will go through why this Snapchat earning is very important, and it will kind of give you insight into the sort of trouble that these unprofitable tech companies they are in. Okay, so if you are able to spot a company with similar issue that Snapchat is facing, maybe you might be able to short this counter before the earnings come out, or whatever that you want to do. Okay, firstly, this is just the daily candle. It is not showing the aftermarket hour. So I'm going down to a smaller time frame. Okay, I'm going down to 5 minutes, and you can immediately see how the price dive. This blue color shaded area is the aftermarket hour. This skin color area is the pre-market hour. So after the earnings came out, you can immediately see Snapchat share plunged by 28%. So let's take a look at Facebook Meta. So for Facebook, right, it didn't really dive a lot, but it is still significant considering that Facebook is still a $495 billion market cap compared to Snapchat. So 5.57% is, I would say, based on market cap, it is still quite a big drop. Okay, of course, it is not like previous time where it jumped down to 20%. And for Alphabet, the drop isn't so much. It is about 3%, 2.753%, around that level. So this is Google. So you will see that both Tesla and Google, both Facebook and Google, they didn't really drop so much, mainly because of the fact that they are profitable. Their business is profitable. Every quarterly they have earnings, and they are also extremely big market cap. And usually when the index like S&P 500 or Nasdaq is supported due to good earnings from other index counters, right? These index component don't really drop so much. So yes, they are affected, but you will see Snapchat fell down by 28%. So let's get back to Snapchat itself, because it is very interesting to see how traders and investors are reacting with regards to Snapchat valuation. So let's rewind back in time. Let's go back to daily time frame. This is Snapchat. So firstly, right, let's rewind back to the earnings back in February, around February. Okay, this earning is actually for December period, for the December 2021 period. And this is extremely, I would say, monumental moment, because when the earning for December came out, you will see the headline saying Snapchat went up 50%. It rallies 50%, it rallied 40%. And the next day when market open, it continued to rally another 10%. Okay, so this is a very I would say absurd news to make the headline, because when you see a counter went up 40% in one day, right, it will lure all the Wall Street bad people, all the YOLO people, all the option trader like want to do a quick hit and run trade on this kind of counter. Okay, but I do feel that this 40% rally is very misleading, because of the fact that Snapchat actually dived down 20% the previous day. Prior to the earnings, Snapchat went down 20%, and this causes the earnings gap up to be artificially inflated in a way. So the question is, before Snapchat earnings came out on February, why did it went down 20%? And that is, of course, due to Facebook earning. So you will see that in Facebook on February, it went all the way down by 20%. And this was one of the biggest decline in a big cap market, going down by 20%, I think, aside from Netflix. So when Facebook went down by 20%, right, it has the same impact on how Snapchat affect every other advertisement sort of related company also. So when Snapchat, I think even Amazon and Google, they were affected by this drop also. And when Snapchat saw Facebook dive down 26%, right, they feel that they are also going to get a very bad result. So they dive down first. They actually dive down first before the market. And after that, when they have a so-called positive earning, they went up. And this quarter was actually celebrated as Snapchat first profitable quarter. Prior to this, right, they were never profitable before. Every quarter is loss-making. And finally, for this one quarter, they were profitable, and then it went up. And now, after that, for April 2022 and the latest earning, right, they are back to non-profitable again. And in fact, the profitability in this quarter is also misleading, because if we look at the operating income, right, they are still loss-making on the operating income. The only reason why they were profitable because there was an unusual item which gives them a one-time profit, which kind of like boost their income for that one quarter, and then the stock just shoot up. But because it is a one-time income, right, they wasn't able to repeat the same feat for their following quarters. And what you will also notice is that when after this big rally, right, it kind of marks the top during that period at $40. And think about it, for $40, right, it's already, the Snapchat already have dropped about 50% from the recent high. And in fact, there was a very big gap down here also. So every earning Snapchat is like making big gap downs, aside from for this outlier in February here. Okay. So let's come to the most important day for Snapchat is this particular day. It is in the middle of nowhere. It is not really earning season, earning days. It is in fact in between earnings. And it came out shortly after the earnings for the first quarter came out on April. Okay, April earnings come out and it was a bad earning. And after that, the stock wasn't very volatile, but eventually it still go down anyway. But shortly after the earnings came out for the first quarter of 2022, right, Snapchat announced something which caused it to drop 40%. So that was when Snapchat developer provided a profit warning. Okay, it was on 24th of May. So they just sent out article saying that they are going to provide a profit warning because they feel that in the coming quarter, they don't believe they are going to make as much profit. They might not be able to meet their guidance that they provided earlier. In fact, the profit gonna drop a lot. So they were pre-warning people. Okay, they were pre-warning people 2 months ahead of the earnings. 2 months ahead of the earning, they were already giving a lot of the market pre-warning. And in fact, they sort of attribute this profit warning to macroeconomic environment that deteriorate further and faster than anticipated. So they are saying that they feel that the market is not going to be very good going forward. And in fact, if you look at the stock market itself, that was actually the right call, because if we look at S&P, right, if we look at the S&P price, that day that they make the announcement, it was somewhere here, but eventually it also fell down some more. Okay, although that was the temporary bottom there, right? It did immediately fell some more afterwards lah. So let's go back to Snapchat. So when Snapchat made that profit warning in the in the middle of nowhere, you will see similar price action in other similar company also. For example, you see Facebook here, it actually dropped down by a big gap down with on the same day that the Snapchat news come out. And even though it kind of like eventually managed to recover, right? But it still went down even lower. Okay. So that was the profit warning. So here's the thing, okay? Here's the thing. Snapchat already pre-warned the market that this quarter, the earnings going to be very bad. And that's why there was a gap down. So you would assume that this gap down has already accounted for the bad earnings. Okay, the gap down has like already accounted for the bad earnings. The market feel that okay, we know you're gonna do very bad. We're gonna sell down first, and then when the earnings come out, it's already priced in. But actually, no. So when the earning came out yesterday, it went down some more. It went down another 26%. It actually dived down another 26% all the way until probably here, until to the bottom here like that, okay? Bottom here like that. So if you think about it, right? If you think about this, it does seem that previously it was already priced in. It was actually already priced in. The bad earnings, so-called the profit earnings, they already hit that price that Snapchat has fallen to yesterday lah. It is just that during that period and now, right, Snapchat actually created a irrational rally because recently we have Federal Reserve announcing that they are not gonna do 100 basis point high, this and that, which caused Snapchat to actually rally up quite significantly from the bottom, about 37%. But of course, when the earning came out and says that actually the earning was quite bad, it undo all the rally lah. Okay, it undo all the rally. So this is the kind of rally that you have to be very careful, because if the company is very bad, they are not really growing or making any profit or what, right? They are just not strong fundamentally. And when the earnings come out, right, they are just gonna undo all the rally that they did during this so-called irrational early lah. So that's why this earnings season combined with the FOMC decision that's coming up next week, right? It makes the market incredibly hard to trade because things are rallying irrationally. And suddenly when earnings come out, and it was, if it is bad, right, they're gonna dive down and undo whatever gain that they make. And this is something that we don't want to get into, given that we have big tech earnings coming up in the next week also. So it's very important to understand this concept, okay? Because if you are trading by technicals, right, you will just blindly buy this breakout and then wow, bottom ready, gonna close the gap, this and that. Then suddenly you get slapped in the face with a 27% downturn, okay? So let's dive a little deeper into Snapchat fundamental, and from there, right, we can sort of spot other companies that are facing the same issue that Snapchat is facing lah. So first, you can get everything from Snapchat investor relationship earnings. You have the latest one is of course 2022 Q2. We have press release, earnings slide. The SEC filing haven't come out yet. We have the webcast and transcript also haven't come out yet. So what I have opened here is press release and earnings slide. Okay, so this is the press release. And this is the earnings slide. So normally they have the same kind of information lah, but the presentation slide is a little bit more professional because they are presenting this during the shareholder meeting lah, while the press release is more of like a more official document like that lah. Okay, so let's look at the announcement. Daily active user increased by 18%. Wow, so daily active user is very important for companies like Netflix, Facebook, actually Netflix is subscription, okay? Then you have Facebook, all these, right? Your daily active user is very important. And in fact, when Facebook went down 20% earlier in the year, right? That is because they actually see the first decline in their daily active user, and that caused that was enough to push Facebook share price down by 20%. So if that's the case, right, why is it that here daily active user went up 18%, but Snapchat actually the price doesn't go up? Of course, number one, you can say that Snapchat actually already dropped so much so I mean it's already baked into the price, but there are a lot of underlying issue that you need to peel the layer a bit in order to see it. Because if you are looking at a press release statement, right, they are not gonna like advertise all the shortcoming of their company, but they are not going to lie to you also. So they will cherry pick all the positive stuff. They will tell you this increase, that increase, but you do have to do some work to kind of see what is going on beneath the hood. Okay, so revenue increased 13% year over year, which is okay, quite good. So let's scroll down a bit. You have the same thing. Revenue increased 13% to 111 million, blah blah blah. Net loss was 422 million compared to the prior year 152 million. So this is very alarming. Okay, this first two sentences should set some radar off in your head already. Because why is it that revenue increased 13%, but the net loss almost doubled? Okay, if your revenue go up, then even if you are on a operating loss, right, your operating loss shouldn't double. Okay, so there is something going on here, and that is because their expenses actually went up quite significantly. Okay, their expenses went up a lot. And if you look at this earnings that you see here, they provide the same information. Okay, the revenue of 1.1 billion, and then the operating loss is 400 million. And in the last year of the same quarter, you have operating loss at 192, which is, you can see it's a 108% increase in operating loss. So between this revenue and operating loss, right, they conveniently left out one line, which is operating expense. So most likely the operating expense balloon up. That's why your operating loss also balloon up. So it's kind of funny how they present data like this, because if you like scroll lower and lower and lower, you will come to a much more detailed financial statement, which is here. Okay, so it's actually the same thing, but they kind of like hide the stuff below here, hide the more detailed stuff below here. Okay, so under cost and expenses, you can see that cost of revenue, it went down. So that's okay, that's good. But if you look at research and development, sales and marketing, and general and administrative, right, research and development went up quite significantly. Sales and marketing also went up very, very high, close to 20%. And if you add up all these expenses, right, Snapchat actually made about 1.5 billion expenses, even though their revenue is only 1.1. And that gave rise to a loss-making quarter, which the earning per share was negative 0.26. So this is the kind of situation that Snapchat is in right now. So let's take a little let's think a little deeper, in the sense that for a company like Snapchat, right, they have to continuously do sales and marketing so that they can increase their revenue. And they also have to do a lot of research and development so that they don't fall behind other big competitors like TikTok, Facebook, Instagram. I mean, Instagram is also Facebook, okay? So they continuously need to spend a lot on sales and marketing and research and development in order to stay ahead. But right now, what is happening is that interest rate is increasing, meaning there's a lot of inflation costs coming in, and they need to spend a lot more money to do marketing or to do R&D, but they are not really getting a lot of revenue from these expenses. The revenue that they get, it kind of like have a what do you call that? The diminishing return. Like previously, maybe they spend $1 expense and they can increase the revenue by $1. So it is a one-to-one. But maybe right now they need to spend $2 on expenses just to increase the revenue by $1. So the expense went up in order to increase your revenue by the same amount. But the thing is, if they do that, then most likely they are going to be in the net loss because the expense went up. But if they cut down on their expenses in order to get a profitable quarter, then what's gonna end up is that they're probably gonna cut so much on their sales and marketing and research and development, and the revenue will become stagnant. Their daily user will start to decrease, and if they start to decrease, right, in the future, right, the competitor will take over. All the people suddenly stop using Snapchat, and in the future, it will cause the profit to go down as well because now your revenue is going down. Okay, so that is what I mean by a death spiral. Like they are forced to spend, but at the same time, the amount that they are spending on all these sales and marketing, it doesn't cause a rise in revenue as much as it did in the past. So they are like surviving on this so-called borrowed time where they probably have a cash reserve. I didn't look through how much cash that they have, but as long as they have healthy cash level, right, they are still able to continue operation with at a loss, but they are on a strict, I would say, strict, what's that word? Strict deadline, okay, before their cash run out. So when their cash run out, right, they need to loan some more. Then after that, they need to take up more debt, refinance, and given how the interest rate is like quite bad this year, that interest, that new loans that they take up is gonna increase their interest expense, which in turn it will eat into their profit margin, okay. So the market is already pricing in all this stuff, and the way they are looking at this, right, they can also see that Snapchat is actually in this kind of death spiral situation that it seems like they are unable to get out of. So when you imagine you are a CEO of a company, right, and you are in this kind of situation and you want to cut costs, most likely you're not going to cut costs in R&D or sales and marketing. You're probably going to cut costs in hiring, in general and administrative. You're not going to spend so much there already. In fact, you might start to cut headcount depending on your forecast or whatever, okay? And that is the main cause of Snapchat downfall. They are in this death spiral. And you can see similar structural issue in other company also. So let me just give you a deep dive into Facebook as well. So this is Facebook quarterly earning. Facebook earning for the Facebook earning have not come out yet, okay. It's going to come out next week, but we can see similar trend in Facebook as well. So now let's take a look at the revenue, okay. So I have the absolute value here. You can see these are, I believe, in billions, 27 billion. Is it? They don't really say here. Yeah, should be billions lah. The revenue for last quarter is 27 billion, blah, blah, blah. But I don't really want to see the absolute number. What I want to see is, I want to see as a percentage, a year-over-year growth, okay? Compared to the previous year, how much is it? What is the increase in terms of percentage this year? So now, if we look at year-over-year growth, right, you can see that from somewhere around here, from December 2021, right, you can see how the total operating expense is increasing. It's actually going up. So from March 2021 all the way until March 2022, right, you can see that the total operating expenses is increased by 15%, increased by 27%, increased by 38%, increased by 46%. And on March, right, it does went down by quite a bit. It did went down by quite a bit, but you will see that you will see that the overall operating income is still a net loss. Okay, it is still a net loss. So the first thing that you will jump out is also ever since the December 2021 earnings came out, right? Facebook is now going into income contraction. They are not making as much earning as they are making in the last year. And in fact, it kind of like accelerating. Initially, the income only contract by 1.5%, but the latest one, it contract by 25.08%. So the income is kind of contracting also lah. So who know what's gonna happen? Who know what's gonna happen in the coming the coming earnings lah. Okay. But another thing that you can see is also the expenses. Okay, the overall expenses. You can see that in March 2021, it was 15.23%. Then after that, 27.6, 38.7, 46.1. And then in the latest, it went down to 38, which is good. But what you will also notice is that the reduction in this expense, total operating expense, is because they reduce their general and admin expenses. They are cutting headcounts. Okay, they are cutting headcounts. They are hiring freeze in order to reduce their costs, so that they can stay ahead. But even when they cut their headcount, the operating income still went down by 25%. So what does that tell you? It tells you that Facebook is in quite a bad position itself also lah. And when we look back at the revenue, right? When we look back at the revenue in March, the revenue only increased by 6.6%. Okay, it only went up by 6.6%. Compared to look at all the other previous year, we have double-digit growth, but in March we have 6.6% growth in revenue, which is why, right? Even though there's a big reduction in your expenses percentage-wise, right? You still see a bigger operating income loss, bigger contraction in the operating income. So now let's switch to as a percentage of revenue. Okay, so I want to look at the expenses and I want to see what is the percentage of the revenue it is. So now here, let's look at cost of revenue. Okay, so previously the cost of revenue is around, like, let's look back at from March. Okay, the cost of revenue is 19.6%, meaning if your revenue is 100%, the cost of it will take 20% of your revenue. It will cost 20% to generate your revenue lah. So that is to say that if you make a revenue of $1, then you need to spend 20 cents to generate this $1 revenue. That is the cost of revenue lah. But that is only the cost of revenue. Okay, we have not add in other expenses lah. Okay, but even under cost of revenue, right, what you will see it's kind of like increasing. In March, right, it actually spiked above 21%. So previously it was 19, 18, 19, 18. Then suddenly we have 21% in March. Okay, so the cost of revenue is actually going up, meaning it's gonna eat into your profit margin. And next, when we look at the operating expense or your R&D, whatever stuff, right? We can see the same trend. Initially, it was 36.9% of your revenue. Then in June 2021, it was 38.9% of your revenue. And now we have one of the highest reading. In fact, I think among here it is the highest, 47.94%. So your operating expense is actually 47.94% of your total revenue. Meaning if you make $1, you are spending close to 47 cents on your operating expense, and that is on top of your cost of revenue lah. Okay, so end up you probably only get like your operating income is only like 30% of whatever revenue that you are making. Okay, so that is how you read this also. So I'm using Seeking Alpha. Of course, if you can manually calculate all this on an Excel sheet lah. But as I do this very often, right, I kind of like give into it, pay the subscription fee for Seeking Alpha so that it will do all this calculation for me lah. Okay, so from here, right, we can see that Facebook is also facing similar issue. Facebook need to spend. Let me go back to absolute. Facebook need to spend more money on their expenses just to make the same level of revenue. And if they don't spend that money, then most likely their revenue is not going to increase. Then the competitor will take over, and then that same death spiral. Okay, as I have mentioned earlier. But I mean, for Facebook, the difference from Facebook to Snapchat is that Facebook is still making money lah. Okay, Facebook is still profit making. They are not loss making, so they got that one thing going for them lah. But as I was looking at this, right, if you are looking at the March earnings, if you went through the same process as I'm going through, you will kind of notice that actually the March earnings sucks. The March earning for Facebook sucks a lot because the revenue is like it declined, and then all the expenses are going up, and your operating income also reduced by quite a lot. So if that's the case, then why did Facebook rally 20% during here? Why did Facebook actually went all the way up? And that is what I mean by irrational rally, because sometimes the market is just gonna do like this kind of weird rally based on data that doesn't really make sense. And because we understand that, we understand this death spiral issue that Facebook is facing, and we understand that the expenses are going up, and the expense will continue to go up because Federal Reserve is increasing interest rate and a lot of inflation going on, right? There is no way in this coming earnings, the expenses will go down unless they do a mass retrench, or they just decide not to do R&D anymore. But given you know what Mark Zuckerberg doing, his obsession with the metaverse, definitely there will be a lot of R&D expenses also lah. Okay, so because we are able to recognize this, because we are able to recognize that this rally is a little bit like, what's going on? Then after that, we look at the technicals, it hit the resistance, and now it's coming back down, right? We were able to place a short position. Okay, so I mean, you can't see the short position here lah, because back then, Facebook is still Facebook, FB, but now they changed to Meta, right? It's no longer here lah. But I think I do talk about this Facebook shorts a lot, because there was a lesson to be learned, and that lesson is that if you see irrational rally without proper catalyst, then it is a good shorting opportunity lah. And I believe that will give us similar opportunity in the coming earnings. So because now it is irrationally rallying, right? Maybe we can make like a YOLO trade before the earnings come out. But since Snapchat earnings came out and this one gonna dive, right? I don't think I'm gonna chase lah, but rather I'm gonna sort of just wait out and see how the price respond. Mainly because currently the market is rallying irrationally due to Federal Reserve not going for 100 basis point hike. So because of that, the entire market is kind of like going up together. And if we are facing this kind of price action, right, we don't really want to short into this kind of very aggressive rally also. And of course, why is Federal Reserve not looking to hike 100 basis point when we have 9.1% CPI, one of the highest CPI? Who knows? We don't know. And because we don't know, right, we don't want to anyhow short also, because yes, market rally, let it rally, but after a while, the market will come to their senses and they will like, hey, wait, we have a 9.1% CPI, but perhaps maybe Federal Reserve might say something else in the coming FOMC decision, and then market will start to U-turn again. So we have to account for this kind of situation. Okay, so that's the end for today's session, and hopefully it gives you a little bit of guidance to how to look at earnings and how to sort of pick out certain things from the income statement. It is not just looking at this go up 17%, oh, it's good, or this go down 70%, it is good. It is recognizing certain patterns within the scope of the current macro environment. Current macro environment is high inflation, tightening balance sheet, and rising interest rate. And within this scope, right, you are able to see its effect on companies' expenses, and it is causing Snapchat to go into the debt spiral that I have spoken. And you can actually go and find unprofitable counters that are in similar debt spiral. And if they are rallying irrationally, you can actually use that as a good shorting opportunity. And most likely when their earnings come out, the price gonna just dive down like how Snapchat did. Okay, so hopefully I've opened your eyes a bit and you can go and do some homework on your own. Have a great day, guys. For my Patreon folks, I'll be seeing you at 9 p.m. today.